This is our Forex blog for July 5th, 2011. And like most days, we really want to buy the strong pairs versus the weakest. The dollar and the yen both have a weekly and monthly trend that are down. The yen real-time trend for most of the day was also down. So it's always an easy, far easier to trade when the real-time trend's down, the daily trend's down, the weekly trend's down, the monthly trend's down. And sometimes you have strong currencies where all the time frame trends are up. Those are pretty much the highest probability, lowest risk trades there are. But the Swiss weekly trend was up and the monthly trend down. And so you could have, I focus more on the weekly trend than the monthly trend. So you could today look to buy the Swiss yen, strong Swiss, weak yen. And look what happened. When that's the case, typically you have these nice, prolonged trends where your likelihood of profits are high and the likelihood of a big move is also higher. Usually when they get above the upper containment band, they kind of run out of steam. But notice how our trailing stop kept you in there for the whole thing except for right here at 13. It caught pretty much everything except for 10 or 12 pips. Phenomenal. And on days like this, you can also scalp. And when you're scalping, you might want to use a smaller time frame chart instead of a 5-minute. Use a 1 or 2 minute, and that way you will have tighter stops. And when wrong, you'll have the tiniest of losses, 5 to 7 pips usually. And sometimes you'll catch some of these 20, 30 pip moves regardless. Today, the dollar was going in a counter trend trade over the last weekly and monthly trend. So you could have traded this against the weak euro last night, or the pound from 2 to 3. It was also weak, and then the weakness kind of disappeared. But the euro was pretty much the weakest, so you had some nice sells in the euro dollar last night. First of all, anytime you see a double top, at a resistance area, in this case it looks like the previous month's high or something like that. Once it breaks down underneath the hourly, it's pretty much likely to go to the lower band, especially the euro, which as of I think Thursday or Friday was up 5 days in a row. So it has some decent number of pips to pull back. The best trade to get into is as soon as you can spot likely the strength weakening up at the high or a double top. Trend line breaks are also very high probability. You can see it started here, hit here, came very close to hitting it here, and it never really went above that. You can also duplicate a trend line, project it off the highs to get a feeling for how strong it is. Or if you would use this previous swing right here, it came up and went a little bit above it, a little bit above it, didn't come close to it, didn't come close to it. So it's clear that the slope of this counter trend trade, trend up, because previously it failed and had a nice pullback, went underneath the hourly. You can see that the momentum, failed here and here to even get up and touch the upper trend line projection from the low. And so you can see just on the chart the momentum kind of dying. And so once it broke the hourly, it was pretty much confirmed. This is your first profit target, this is your second. If you missed the perfect ideal trades, wait for a little bit of a pullback. Previous day's low right here, not a bad trade. You can see, it did pull back a total of about 40 pips, but it was in a very choppy fashion. So if you had shorted right here, it looks like your trailing stop got you out right here at 80. You gave back half the profit. On choppy days like this, or days after holidays, or preceding a holiday, drop down to maybe a 2-minute chart so that you can have tighter stops and capture more, of whatever meager trends there are. For example, short there, when it failed to go above it, you can see the momentum kind of slowed down. You had a small profit, short here, about a break even, short here, again another small profit, rallied up again. This short, or if you shorted right near the high here on a tick chart, somewhere around 90, notice that trade got you out somewhere down here at 73, so you made 17 pips there. On choppy days, a lot of the trades are going to get chopped out. There's no way around that. And one of the best exits, especially on choppy days, is if you're short here and you expected it to go down, draw your fibs off the first wave, and look to get out at the fib target. You know, on a choppy day, you're not likely to go. It's not likely to go beyond the 1.382 fib target, and you can, you know, with fib levels, draw those on any time frame chart. Let's just showcase this on a few other pairs today. Pound dollar exploded up here. Notice the fib level on there. It never really went more than a few measly pips above the 1.382 fib target here. It also hit the upper containment band. So, you know, that makes a great place to get out of the trade. And in any big move like that, notice the trailing stop had you long right here, right there, around 10, and it got you out all the way up here about 100 pips later. So whenever there's big moves, this, you know, really keeps you in to the trend. You know, but the vast majority of your trades are going to be small, you know, 5 to 15 pip wins, and then, you know, some 20 and 30 pip moves, and then smaller number of 50 plus pip moves. Looking back at the currency meter, you can see, you know, just extreme strength in the pound at around 430. Obviously, this must have been some kind of news release, and the yen was consistently weaker than the dollar. So you would have had probably a higher odds of a big move in the pound yen, which also exploded up. You can see lots of resistance at the 20-day moving average, previous day's high. There's tons of resistance right here. And when it breaks above there, there's no resistance until up here. 57 from here. It's about 40 something pips away. Anytime you can get into a trade where the next resistance level is 30, 40, or 50 pips away, it doesn't always hit that level, but it frequently does. Notice my Fibonacci profit target levels. Just double topped right here. It's always risky to sell a super strong currency, but when it comes up, pulls back and double tops right there above the white containment bands at my Fibonacci area, also super high probability counter trend trade there.